What's going on, my design dude and dudettes? Happy Monday. Or as we like to call it in the biz, happy Tesla Battery Day Eve. So, I wanted to use this video to kind of showcase a couple of choices to choose in Tesla for trading options. It's a little bit interesting. Let's get into it. I'll give you an idea of what we're staring at here. But basically, this is the daily chart on Tesla, and it's the day before Battery Day. So that's coming out tomorrow, 9:22, I believe, after market close. And where there's a little bit of hype, you can see, we had tightened up into a wedge up until Friday, so the day before today's trading day. And, generally when it tightens up like this, you see some movement, and that's kind of what we're seeing now. It had opened up the day down, and then from there we started to kind of rally in a bit. So you can kind of see some big volume here, and then this really big volume and down move into the 410s, and then it just started going back up. So that's pretty nice to see. It generally, maybe gives you a little bit of a bullish bias, but with announcement days like this where everyone's staring at it, it's almost a binary event. It's just like earnings where it's kind of an all or none. You can do good or have this go very strongly against you. So that's a key one to look at. Now, as it relates to options, let's kind of talk about a few things. Like we always discuss here, this is just educational purposes only. So always keep your risks in check. You're the manager of your domain. So just know that I'm here for educational reasons. I'm not a financial advisor, and nor do I ever claim to be. So take this at your own risk. But to give you some ideas, some ideal times actually to be an options buyer would have been probably next week, or sorry, early last week or anything like that. However, I had checked and they were pretty well inflated. So, in my opinion, just being an outright buyer of any options in Tesla is a really poor choice. And we can get into the platform here and I'll show you. I mean, this is crazy. You're seeing the volume, the IV here is just caca insano. It's really crazy how big it is for the September 15th, September 25th contract, and then even just the earnings dates, everything. So we have a lot of expectations in terms of Tesla land, and what this generally tells you on this side when we're seeing big volume, big IV, is that the prices are pretty inflated. So that's one of the reasons I'm not a big fan currently of being just an outright options buyer. Because basically what you're saying is that you're going to make a bet to buy something that's really inflated, and after the event, just like after earnings typically, you get this IV crush. Basically everyone just sells, or the actual extrinsic value of the option just drops significantly. So you basically lose all that IV that has bloated the stock. Now just for fun, let's just look here to give you an idea. Puts are on this side, and this is the lower prices for the strikes. Calls are on this side. Excuse me again. And we're going on down for the higher strikes. Now, these are pretty high. I mean, you'll see 800's the cheapest, right? But still pretty inflated because you're making a bet that you get to 800 in 4 days. And so to me, that's a really tough bet to make. You're kind of shooting for the Powerball there in terms of doing some gambling. So be careful there. I don't recommend that. Just for fun, let's go out to the next monthly. I have a put credit spread in this, so that's why you're seeing these little dots right here. Excuse me. Again. Okay, and you can see clearly 800's really inflated. And here's the other thing I find interesting when we go to this monthly. You look at the volume, right? Here's all the call volume on this row, or this column here. And then here is all the put volume, which is basically nothing in relation. We're seeing single digits. Here we're seeing like 3K, 4K, tons of contracts being traded. And again, this kind of ties into the market idea that everyone's expecting an up move. And me being a very bullish Tesla person, I get nervous when I see stuff like that. It tells me that I don't want to make a bet unless I'm protecting myself. So a couple things to maybe consider is, since these are so inflated, we might want to consider being an option seller. Okay. Now, if you're super, super bullish, you could do a couple things. We can go out to, like, say, the 30 delta here, or maybe the 25 delta, and that's even safer. So let's do that. I'll go here, 378. And we can just, that's my short strike here at 378. I'll just buy a protective, let's just say $10 wide here. So 378, 368. Basically, I'm sort of in a way risking a $10 wide. Right now, we're looking at pretty okay premiums, $365. Here, 365 is the mid. And so you'll see on the platform, I love this. It tells me what my max loss is already out the gate, and my percentage of profit. Right now, typically this should actually be about a 70-75% chance. But because the expected move is so big, the expected move goes out all the way to the 13 delta. That's crazy. So, we're, 100 points away? Yeah, it's basically expecting a 100-point swing to the downside if possible. And let's see, if we end up going to the upside, we go up to about 570, almost a little under 600 here. So you'll see this gray bar. That's crazy town. So that's a great time to be a put seller and or a call seller, just an options net seller, I think. Now, obviously, we are putting some risk in, right? We're basically risking about 650 to potentially make about 350. So that's not too bad. There's an options calculator website that I really like, options profit calculator. You can always plug these in. So this would, in essence, be a credit spread. And it's called optionsprofitcalculator.com. And you can type in the symbol. So Tesla, you'll get the price, boom. And then you're actually writing the option. We're a seller, so we're actually writing contracts. And here you can also select the long option, which was our, I think, 368. Yeah. Okay, so 368, 378. So let's go here. 368, boom. Oh, I gotta choose the contract date. Whoopsies. So the 16th. There we go. Boom. And you go to 368. And then we wrote, oh, and actually keep in mind that was a buy. And then this is our short option where we wrote it. So go with that. 16th, okay. And that was 378. And so if you don't have the platform like I do with Tastyworks, where you can sort of see everything right away, this would be your next best bet. So usually like Robinhood traders and stuff. And you'll see we're pretty close. 357 is the net credit, which is about there. So 360, yeah, we're pretty close. So I'll take that. That's easy. All right, let's just agree to that. Boom. And we will calculate this option. So what you can see is that I am sitting profitable as time goes on, and as long as we're basically within our profit range. So this is kind of neat. It'll tell you that you're looking really good so long as the stock stays within a certain range there. But if it keeps dropping, then you will start to see some losses. And in essence, we're looking good. Unless Tesla cuts in half or something, that would be an issue. But this is where we tie into maybe some more advanced strategies. So like an iron condor is something that I'm considering here, and let's just play around with this. So 25 delta. Okay, so let's now take sort of a credit spread, but on the call side, and we're going to go higher out of the money. And since I'm generally a little more bullish, I might even go to the 1 standard deviation. So let's say about 600, and let's see, oh, these are 20 wide, so 620, a little bit unbalanced. I wish it was the opposite, actually, where I was going 20 wide on the other. But that's pretty good. I mean, we're risking. Let's see if we can bring this buying power down and max loss. So I'm actually going to do that on the put side. And basically, I'm going to say, let's go to the 30 delta, which, as you can see, these are the deltas here. And that should take us to about 400, I think. Okay, 400. Oh, 398. Good. And to keep those 20 wide, let's go to 78 here. I'm going to delete this leg. Boom. 378. Okay. So this is great. Whoa, this puts us in a great position. So we're basically going 20 wide. I'm a little bit unbalanced. I'm at the 30 delta on the put side. And then on actually the call side, I'm more at the 25 delta. So I'm okay with that kind of style. There's a lot of skew to the upside, which is kind of interesting, but it does mean that I can go further away from the money and collect more. So you'll see I'm a lot closer to the actual stock price. You know, we're at 450 basically. I'm going a lot closer here on the put side. So I'm basically saying it won't really go down as much as it will go up. We're giving it room to go up on the upside. Now this is where it's kind of wild to me. We're actually looking to take in more credit than our actual max loss. So the only time this is looking terrible is if, let's just play these scenarios, okay? I'm planning on maybe entering this today. I'm thinking about actually waiting until tomorrow for an entry, because that's when this will be at maximum value. Like, people are going to be buying, and the IV should get even crazier between now and then. And so what we could see is that instead of this trading at like 1,075, maybe I add on another $200 of credit to take in, and that even increases much better my max loss versus max profit ratio. And I would love everything about that, because then I'm basically making a really high probability bet, and I'm getting paid really well for it too. So generally, to take this type of probability, maybe I get paid about a third as much or less. So I'm really happy with something like this. And generally, smart me would be like, take this now. But I do already have existing positions in Tesla. They're all really bullish. So I don't mind waiting a day or two, actually just a day, basically until battery day tomorrow, of when, after the market closes, they're going to be doing the investor day. Basically the presentations, they'll have a couple people there and everything. So I would really say my biggest risk to the upside is thinking like, okay, can we go from 450 to 600 that soon? If so, I could be sitting in lost territory, but what I can do is actually start rolling these. So I would basically see these puts probably have less value, a lot less value than they currently have. And then from there, I can roll those up. So say this goes up to like 550. Well, then I can roll my puts up now to about 500 and, 480 or something like that, to kind of keep my condor still there. But now I'm just soaking in more of the extrinsic value that I'd want. So pretty good option. This is something I'm really considering. I'll give you an update for tomorrow, but thought it was worth exploring so people could see some of the choices there in terms of trading. But I really appreciate you stopping by. Please hit that like button. Go ahead and subscribe if you like the value you're getting. I don't want to sell anything. I'm not looking to sell courses or do anything. Really, you're here because my passion is to help you find your passion. So, or help you find and pursue your passions. So, at any rate, I really appreciate it. I hope you all had a great weekend and happy Battery Day Eve. I'll come at you tomorrow. All right, thanks. Bye bye.